Good morning, traders. This is Bruce at VeloxPro. Can you hear me and see my screen? If you can just give me a, oh yeah, good to go. All right, yeah, thanks Kim, Richard, Helgo, Russell. Okay. We have a guest speaker today, John Slazas. And before I get into the introduction, just want to show some of the new traders in the room here, some of the resources where you can find BookMap and some of the education regarding BookMap. So just bookmap.com under the pricing tab. There's the free version, pro version, and add-ons. This free version, just please note, this is a standalone product. You don't need data feed or platform. It is a self-extracting file. It just will run from your desktop and play historical data files. Okay, the pro version here. This is risk-free for with no questions asked refund policy. $7.49 lifetime price. And with this, you will need a data feed or platform to connect and view the live markets. You can record those markets and play it in replay mode. So a lot more flexibility with that pro version. You can also find out about some of the add-ons here. And then let's get to some of the educational things. I'll just go over, once you're in the members area here, the where to find the, there's many things here in this educational tab, but the archived events, this is where you're going to find the these recorded webinars, such as this webinar. It'll be in here from this link from August 25th on. There's a playlist here that you can open up, and you can see them from August 25th to current date. Okay, so that said, let's move on and get to John. So John Slazas is a veteran market strategist. He has been trading the markets as well as providing service for professional traders and other discretionary traders for a number of years. So he is a BookMap user. He has his own analytics and quantitative models that look at the market, then he drills down in a microstructure with BookMap to take a look at what's going on there to help him solidify some of his larger time frames in his structures from the his analytics and as well as the quantitative analysis. Yeah, that said, John, welcome. I'll hand it over to you.
Thanks, Bruce. Hello, everyone. Let me get set up here.
The link is in the chat there for people, for John's website. So if you want to take a look, if you're interested.
All right. Yeah, as Bruce said, JS Services has been supporting traders like yourselves for over 25 years. We started on the exchange floor, and we were always known as the level guys. And our work has changed as the markets have changed, and we really were more behavioral, real technical analysis oriented. And now we've kind of transitioned, like the markets have, to just be pretty much all quantitative. But with our quantitative math that we have, we've been able to integrate a lot of the technical analysis and the behavioral studies that we know, and take all that insight and put it into the math. And so it's really provided some nice structure to what's going on in the market these days. And what we found is that what's more important than the what level you're trading off or what area is more what's the condition. Markets are fundamentally driven, and interconnected, but the price movement within that framework is represented by a market state. And so if we talk about a market state, and this is our application, we call it our desktop application. Neutral digestion would be a market state. Bear trend would be a market state. Bull trend. Those basically when a trader's looking at it, you're coming into the market, Are we in what's the underlying, are we trending or non-trending? Kind of more of a black and white picture of what the expectation is. Are we going up or down or sideways? And what JS Services has done is we've expanded on that a little bit, because markets, they are always expanding and contracting, but they don't always expand and contract in the same way. Sometimes you'll be in a bear trend situation, but other times it might be more of an accelerated bear trend, really aggressive. Or you may be in a bear trend correction, which you're going to have a different expectation. The market's in a negative trend, but you can anticipate those sharp corrective rallies against the trend before the trend's going to resume. Or maybe you're in a more of a digestive market state, or neutral, shifting state. And so as traders, we've all lived in these environments. And what we've done is really just, kind of gone in detail to really parse out, all the different tells and nuances of those trade environments, so you really can to align, your style and your tactics. You've got your, most traders, you can break it down. They like to trade with the trend, or fade momentum. So being able to really dial into those conditions to say, okay, well, today we're, my trending tactics are going to work a little better because the market's more in a trend mode. But each one of these market states has a structure aligned to it. So if we take a look at a market that's in neutral digestion, this neutral digestion state is true as long as the market is holding this structure. So if we're in neutral and we're expecting a sideways trade, well, that expectation is going to remain true as long as we stay within this range. As the markets transition from one state to the next, they break this structure, and all of a sudden they're in transition to a new market state. And so we never know when the market's going to transition, but we can identify the structure, and that can give us insight to when we have to do something. And kind of going back to the bigger picture, and what really drives the markets? Well, the funds drive the markets, and the funds, their short-term outlook is 3 to 6 months, but they're concerned about today because they're concerned about today's close, and they're concerned about today's close because of their performance. They're performance driven. So how's today's close compared to last week, last month, last year? And because of that, they're concerned about the session, but really the close, and is the market going to kind of hold structure or break structure? Where do we want to add? Where do we want to hedge? And they really just identify really a single area to come in and get involved in, and it's typically at these structure points of what the condition is. And so when you're looking at our work and what we do, we're really just providing you with more awareness of what the market state is. These are just really just facts of this is what it is, and everyone's got to deal with it, kind of a thing. And then what we're going to do now is we're going to start to look at okay, how's the market? We're going to watch price action within this foundation. So if this is the market state for the S&P today, and the market is in a neutral digestive state, and it's trading within this range. And so if we look at our work, what's the expectation? More of a digestive day. Sentiments, we're expecting kind of more of a churn. You could see some volatility decrease. One thing that we do with our work is we identify, a sentiment bias, and today our sentiment bias is above the market, 20, 40, and a quarter. So that's just telling us that, we're in neutral, but we've got a negative skew, and we've got a negative skew up to this 20, 45, and a quarter level. So this is our kind of the top of that digestive range, and then the low point is at 1996 and a quarter. So the expectation coming into the session was we've got the potential for a digestive session within this structure. But But as what happened earlier, we've broken that structure, and so this is because we're in this digestive range, and we've broken this lower support of the digestive area. Now we've broken out of this digestive range, and this statement that we're in neutral digestion is no longer true because we're actually below this price point. So I'm going to pull up a daily chart here, and this has these metrics on it. So we've got our sentiment bias, and here's this we call our upside pivot, our downside pivot, and we're trading here below that level. So we're coming into the market, and we see that, okay, we were in neutral digestion and we've broken out. So for now, this statement is no longer true. We're no longer in neutral digestion. We're in transition. So that's a good fact. And so our expectations aren't that the market's going to consolidate. Our expectation is that we are we're transitioning to a new market state. Are we transitioning into a negative trend? Possibly. Are we just expanding the digestive range? That's possible as well. We've got with our this is our indicator that we look at, and this is a 10-day plot of it. And so we've been in neutral digestion, and now we've just broken out to the downside. And so are we going to transition in kind of to a more of a bear trend situation, or is this just an expansion of the range? So that's really what we're looking at now. So now so we've got some good awareness that the market was in that digestive phase, and if we take a look at this chart, prior to the session, pull this up a little bit. This is coming into the market. This is where we were. We kind of had a big negative drop. But we bounced back up, and we still still stayed digestive. And then today we are breaking out to the downside. So now we're breaking out of that neutral. So that's our awareness. Our awareness today is that we're in a downside breakout of a consolidation. So the markets up until now, we've been kind of at big sideways. We had that sideways day yesterday, and now we've broken out of that sideways day. So below this 1996 and a quarter level, we're going to be weak, and here's yesterday's low at 1992 and a quarter. Just giving us awareness is kind of this is where we are on the bigger picture. So now I'm going to dial into what's currently happening. So here we have, let me pull this up here. So here's our downside pivot area. We know this is our big, this was the breakout point, and the market did this overnight. And we kind of shrink this down. So right after right when the market opened up at 5:30, it broke out to the downside, and now one thing that we get out of the work that we do is kind of what price segment distance the market's trading in, and whenever we get a breakout, we're always looking for kind of two segment moves. So a segment where average price map distance is what we call it. So from 1996 and a quarter down to 1981.50, that's kind of one segment, and then two segments would be down to 1966.75, which is here, or kind of our second target. So this is our expectation. The market would trade down. If we're going to have a kind of a normal breakout, it's going to trade down to here. But if we're just watching this price action, so when we talk about price structure, really, what's a trend? It's market that's making, lower move lows, lower move highs, or higher move highs, higher move lows. So we're always just watching that, just keeping it simple, simple price structure. We could use a simple trend line or a moving average, and just to give us some guidance of, this market broke out to the downside, and it's starting to, and it's working negative structure. So we got lower move low, lower move high, and we're watching this price action within the market structure. So these price map levels represent the structure of the market, and so we're going to watch price action within market structure. And then all the other technical indicators and technical analysis and profiles and things like that are really kind of secondary to that. The major thing is, what's the underlying condition? The underlying condition is a market that's in a neutral digestive state. That's the foundation. And then the next big thing is, what's the structure of that state? What's the price structure of that state? That's really setting the foundation. There are some inherent strategy themes, and we've broken out to the downside. And in this market state, when we've broken out of the neutral digestion, so ideally we wanted to sell it higher. And now we're broke out to the downside. So we're looking at more of a hedge strategy, and one of our hedge strategies is after we get a breakout, we're going to look to sell against this 2010 level, which is here. And so we may be setting up for that opportunity. So the market is broken out to the downside, but since it is neutral and since sentiment's way up here, a lot of times when the market's in this condition, you're not getting these smooth breakouts and just kind of just go to zero. It's going to break out and it's going to kind of churn a little bit. And so this is kind of just one of the attributes of this is, whenever any market's in a neutral digestion with sentiment above the market, this is how it likes to behave. And so we can watch the price action. We can see, okay, we had this breakout. We're working market structure. We're just climbing the staircase lower, and now we're starting to. We failed here, and we couldn't stay below this market structure point, and now which is a little bit of a tell that, hey, this might be over. And then we're watching here's the lower move lows, lower move highs, and at this point we're breaking that price structure as well as market structure. So this is a good tell that this negative momentum is going to take a pause, or it may be over. And now we're coming back to our breakout point. So now, one thing we know is that ideally right now we're looking to sell around 2010 based off this hedge strategy. We call it a sell DIR CR breakout, meaning that we call this our critical range, and the market has to break out of the critical range, and then we look to fade that momentum. Market may not get all the way up there, but really, anywhere really from here all the way up here, this is potentially a sell zone. So now we can look at the BookMap to let the market tell us when we want to get back on, get back into a selling opportunity. Because what do we know for facts? Fact is we were in neutral, and fact is we broke out to the downside. Fact is, if this breakout was just going to really accelerate and have an event day, this negative structure would have held. The fact that we broke this negative structure tells us, we're not having that event day. But this is still, the market is in transition, and we're looking to sell into strength, and we can use the BookMap to help, give us some guidance there. So we know this is the breakout point, and we can see that we've got some resting paper building up here. We can also watch this, micro price structure. So we're going to, again, it's just real keeping it simple. Markets are either expanding or contracting, and when they expand, they like to hold structure. So we can just kind of watch this higher move highs, higher move lows structure build. We can see, look for confluence. So we have, shrink this up just a little bit. So we're just kind of working this from this chart over here, and so we have this peak that we've taken out, and now we're trading up here, and we can see there's resting paper building up around this area. So this is a resistance point. Market can easily just reject from here. For size management wise, This is a bigger size trade, but here's an opportunity to sell against this area. What we've done, let me pull up a different chart here. So with the BookMap, we have a notes. We have a JS notes column, and so if you come, you can insert. If you have the custom notes, you can, and you're enabled, you'll have a JS notes column here, and it'll have these price map levels in the notes column. So you can see here, this is our upside pivot or downside pivot, 1965.25, and then you can see this band around it. And what this band represents, let me blow this up a little bit. So we have a couple different metrics that we look at. We have our figure. Let me get rid of the minor levels. So here's just the major price map levels. We have, we know this downside pivot represents the low point of this digestive range. So we had a breakout there. So we're in this hedge theme right now. And we have a couple different metrics. One is the variance. So this is really kind of the sweet spot for your entries. So if we're looking, as we're coming into this zone here, this is telling us this is our good place to sell, or above it, it's a buy. And we can see with the order book kind of building up there, it gave us some confidence that the market was kind of going to defend this area and say, okay, we broke out of that neutral zone, we're coming back into it. So this is kind of the optimal area. So I like to look at the, this variance area is kind of, with confluence with the order book building up, and so this is telling me that we've got a lot of paper here at the DP, and really the resting paper is all the way down here. So you've got this big zone here. So here's basically selling it against here and looking to cover it back down at these levels here. And then the other metric we have is what we call our alert distance, and that's represented by this bar here. So we have our variance and alert distance, and this is, think of this as kind of a signal acceptance zone. So if you're running a system or you're looking for your setups, you really want to focus on your entries around these structure points. Or if you're looking for your dynamic support and resistance, you're looking for that to build within these zones. The algos are living in the middle, and you can get chopped up here. And it's these major structure points is really where the funds are participating, so there's more liquidity. And you can see that, the real liquidity is at these major structure points. You got, you got a lot of support happening here. The market's kind of set up for kind of, it looks, could easily fall back into a digestive state because that's what we started within, and we saw how the market broke that, kind of aggressive structure. But this is a kind of a classic example of how to use the BookMap, where you're coming into this area. This is a potential resistance because that was the breakout point for the neutral market state condition. And so as we're coming in here, we can see how the the order book started to change. And at this point, the market got a lot more aggressive. So the sellers were kind of backed off. So we knew that anywhere in this zone is a sell opportunity. I like to kind of spread into things, so and also I can use this resting paper for my stop placement. And so I'm looking for the kind of the resting paper along with the market structure metrics, along with the the price action, the price structure to kind of give me some guidance. So I can see here I've got a high, we're looking, we're just looking at just classic price structure, lower move lows, lower move highs. Where's the structure point within this metric? Well, I've got one coming in right at my variance, so I like that confluence, and that matches up with the book here. One thing I know is that that I am concerned about is that I do know this is really my sweet spot. So I'm still dancing with this. I definitely have an opportunity to, there is an opportunity to be a seller against this paper right here, and I'm qualified to do that right now because I'm right at the lower part of my alert distance, so this is a qualified sell opportunity. It's not a big leverage trade. I definitely would be more interested in selling it higher, but this is definitely an opportunity at the moment. So if I was getting if I had another, let's say I was running an oscillator, because I'm going to use an oscillator to fade. Let me see, pull up an indicator. Just take a look at that real quick. So we've got, I'm not so interested in oscillators when they're in the middle, but now we're coming into this area, and we have a little bit of a divergence coming into this zone. So that could be a potential. Give me some insight to additional signal to want to fade this area. I've got resting paper here, and I have this kind of dark area. So like in the BookMap, what I like to do on my brightness, I like to kind of have my brightness way down because I want to really see where the bigger paper is, and then I kind of move my contrast way up. Is what I like to do. And so at the moment we're looking for this to happen. What's happening here for sales against here is we're looking for this to start to shift down and start to get more aggressive and start to press this this market. But you can see it's getting, and this is just getting heavier and heavier, giving you more confidence that this market has got a lot of resting paper here. And so just keeping it real simple. With our work, we're providing you with the facts of what the condition is. So what's the market state condition? This is our market grid. You can quickly flip through markets. Hey, I've got I'm looking for opportunities to fade momentum. Okay, well, digestive market states might be going to be a good one for me to do that. What's the condition? Here's a neutral digestion. What's the structure of that condition? This is going to help me, to identify. Okay, here's where there's going to be bigger liquidity because we're going to have more fund participation at these points. What are the main strategy themes? Well, ideally, and these are intuitive as well. If you have a neutral digestive range and sentiments above the market, it makes a lot more sense that that's going to be your optimal strategy is to fade momentum into this area. You don't always get those opportunities, but when you do, you have to leverage up. The other thing on the optimal side would be a false breakout to the downside, giving us a kind of a reversal. So you take out the support and get back above it. That's a classic, kind of head fake to the downside. And on the, if the market does break structure to the upside, that's an upside breakout. If it breaks structure to the downside, we're not apt to really press it. Other market states, we would look to press it to the downside if if the market broke structure, because that's just a function of that state. Because we're in more of a neutral, we're looking to kind of fade the pullback. So we're in a pullback right now, and that's kind of the mode. Is we saw that we had that break in this negative momentum. This is exactly what we're anticipating. We know it can come up to here, but we had this structure here that's in alignment, and we had this little oscillator signal here, and so now we can use the BookMap to help identify. Okay, we had this resting paper start to build up. To confirm that, we can see that selling against a lower variance here is still a good opportunity. We can see our risk. We can see in the order book that risk is kind of matched up with this structure here. So even just putting the stops above the alert distance on the upside. And what's our opportunity? Looking for the market to kind of retrace back down to this area, and we can see that we're getting some confluence there around this 1984.5 level, which is kind of back down here to this area. So the market's kind of defined this kind of zone. And I can throw on minor levels here. And so these minor levels are just, they're showing us that, kind of the segment moves the market's trading in. So, I'm looking, having the market reject here, and it came just shy of the variance off this minor level. And I'm really looking for this order book to shift down and really start to press it. So this, this kind of action, I want to see all this stuff really shift down to tell me it's really time to go. But we could use another trend line here. Again, just keeping it real simple. Just to kind of give us a sense, or we could use some moving averages. It's not showing up very well. Let me change that color. There's no magic numbers on any of these indicators, but they, just to kind of get some insight to kind of in your face of what's this market doing. Is it trending, or is it, which way is it trending? And if we're looking for a turn in trend, we want to see a break in structure. So we're always going to monitor that price structure within the market structure, and then we want to look for that confluence at the moment using BookMap. Any questions so far?
Yeah, not at the moment. Everyone's absorbing the market digestion that you're talking about.
Yeah. So if you're placing, if you're in at the moment, what happened. And it's always good to look at what did the market pay out. So if we're looking at this, market. So I've got a lot of different. This is an application that's I'm using kind of NinjaTrader, and I'm using Trading Technologies. I kind of have both of these platforms going at the same time, just to show you some different things. But we have some different integrations. But if we're looking at what did the market pay us today? What did it pay out? We were looking for on the S&P, and we can take a look at another market, but in the S&P, as we're coming down to this support area, we're looking for a buy DP reversal. So a buy DP reversal never came out. The market, on a reversal, it needs to come break through. So here was our trigger that the market was, failed from this downside pivot. So now the reversal, the market would need to kind of get back above that variance, and then that's telling you that it's a false breakout, and then we can go. So we never had that. It never gave us that. And so all it did was it broke out to the downside. And then this number that we call our CRX plus, this is a, let me just pull up the critical range here. So, this critical range, really defines the market state, and with the upside pivot and downside pivot, and then we've got the midpoint, what we call our directional. It's really just kind of a rotational number, with it positive above this price, negative below it, leaning to the upside pivot, leaning to the downside pivot. But this critical range is an interesting structure, and we can even further divide it. And this, you'll see the markets behave, this price action behave within this critical range. And a lot of times when you have a digestive state, the market will really churn within these what we call our CR plus and our CR minus. And then once that's violated, it's a kind of a tell that the market's going to make a play for the next, the major level. And then when you break, as you break out to the downside, this critical range extreme negative, this is really the confirmation to a downside move. And so after you've done that, it kind of confirms the market wants to go lower. Now, you can have a squeeze, and you could have a squeeze all the way back up to the CR minus, or even in this case, potentially up to the directional. But you still have, the expectation is still, kind of negative that we're going to go down. And so that's what we're looking at today. Is, what did the market do? It broke out to the downside. It confirmed it, and so that set up this, fading this momentum into here, and giving you sell opportunities. And you kind of, overnight. Here's kind of just after midnight. We're coming in. We're pressing that variance, but we're still holding this, this negative structure. And so, then this breakout follows through. It pays us out a full APMD, a full APMD and a half. We don't get to our second target, and then we break price structure. So you have the lower move low, and then we break this high. And we can't hold below this minor level, and then you have this kind of shift, kind of above the averages and or trend lines, and you've got a lot of different things that are telling you that the market might be done here, and now you're getting that kind of that corrective rally. So now we're watching this price action, and we're looking, and we're going to just watch, higher move highs, higher move lows. So we've got, here's some good positive price action, making higher move highs, higher move lows, higher move high, higher move low, higher move high, higher move. Now this needs to make a new high to kind of keep that high in place. Right now we're kind of keyed off this structure point, so like around 86.75, and so you can see how that's the book likes that level too, because that's a big that's really the breaking point for this positive momentum. So at the moment we're not sure. We can use other things. We can use the BookMap. We can see that we still have some resting paper here to sell against, but we haven't really, we haven't broke. We still have this positive price structure off the lows that we're dealing with. So this breakout was the best trade. It happened overnight. A lot of times that happens. And you had the confirmation breakout to the downside. You squeeze back into the alert distance, and then you broke this structure here, got the pullback, and then started to work lower. So that's where we're at in the S&P. So it's it's definitely a little more aggressive to step out and sell against this paper. You can see how this paper started to shift down and start to press it. We really want to see this stuff shift down to tell us that this thing's ready to roll over, and we know price action wise we want to see a failure here, and so we want to see the book complement that. So with all this dark action here, it kind of just says there's a lot of, the market could easily, the buyers aren't really getting aggressive. The buyers are going to get aggressive. You're going to see this paper shift up, and since it's not, it's kind of weak. And so here you can see, when this starts to shift down, it's a sign of weakness to then jump on things. And if we start to fail here, we can take out back under this area. That's going to be even more aggressive. And then when you have the trade vision of the structure, we know structure-wise this thing wants to go down to 1966.75. So if we do start to get back on this, and then you could use technical analysis too. You could literally take this swing off of this high. Where does that come in? It's probably going to come in somewhere in the zone. But we do want to see this, this market, this positive momentum start to break down. And we can just, look at the bid offer line here and just kind of just watching this. And so this is this is the higher move low point. So that's going to be a big number. And as this stuff shifts down, that's going to press it.
All right, got a few questions for you.
Yep.
Nick is asking about how you use the volume dots. Do you use the BookMap with the large volume dots, or do you find that is not helpful?
I like large volume dots. They, let me see if this is. Yeah, I really like to look at the the big action on my volume dots. Let me see here.
Hmm.
I'm having a little issue with them
Yeah,
today.
yours aren't showing up. Maybe hit restore. Oh, it's because of your minimum accountable trade size up there. That's what it is.
Oh, okay.
Yeah, put that in at 1, and then maybe try there 99 or
Yeah.
999.
No, that's it.
There you go.
Yeah, I like this. Definitely the BookMap. I'm new with BookMap too, and I found some stuff that really works well. So I really like to keep it simple and look at the paper and look at the kind of where the liquidity's coming in and out of the market, and seeing where the resting paper is to help me identify where within my variance these metrics I want to participate, and then I also use it to help me with my stop placement. So I'll look at where the paper is in relationship to the price structure, and where's that price structure within the market structure metrics, and then and if there's if I had resting paper kind of above that price, well then I'm going to put my stops above that. But with the volume dots, I like to use them in different ways. With this one we had good intensity of trade coming in. We had good intensity of trade coming in here. I like divergences. Um, Having some intensity of trade on a break in structure kind of gave you that little spurt there. But I like to see. Let me see if we have an example. I like this example where you're coming into this support area here with some intensity of trade, and then you're coming back into it and you have less of it. That's a kind of a good reversal tell that I like to look for with the volume dots. But that's something I'm playing around with. I really this technology is new, and it's fantastic. This kind of used to be illegal when you were in the trading pit to think that you could actually see this information. A lot of high frequency shops have had this for years, and now it's more accessible through BookMap. So it's I think it's kind of a disruptive technology for the trading dome, because you have to, if you don't have this information, you're missing something. That's one thing that I like working with BookMap and everyone at BookMap so well, is that it's such a complement of what we do, because we're all about awareness. We're all about just knowing the facts. Knowing what's the condition. This is the condition. This is what it is. You got to deal with it, and this is the structure of that condition. And then we get, and here's the themes that are anticipated. So I know those are the truths. And then when you start to dial in, and we've got our metrics, and so we know the facts, and we can watch price structure within those facts. But now we're here at the moment, and what's going on at the moment? What's going on at the moment is, this is what's happening in the order book, and who's doing what. So these are all real-time facts. This isn't. There's no lagging indicators here. This is just what it is. A lot of traders, really successful traders, the only thing that they had on their screen was the dome, and all they did was watch. They just watched the order book and they traded off of it. They don't even have charts up. And so now with the BookMap, you actually can see the history. So it it definitely makes it easier. And it's just just kind of an how the markets are evolving, and this is a tool that you can use to really evolve and just see the history. You can see the activity, the algo activity, and where the and when it comes to resting paper. So like on this order here, I can see that more than half the book. This is the large lot tracker, this white hash. More than half of this order is one person. So I know that I can't really lean on that so much, because if that guy pulls his order, that's going to be gone, and now the liquidity's back up here, and I got this little bit of a gap. So that kind of information, if you're just looking at a regular DOM, you don't know that. You just see 834, and then how long has he been there? So it's all great stuff.
Yeah, definitely. I mean, that's interesting that you brought up the that flurry of activity and volume with the dots, and then the lack of volume on the retest, and more like a exhaustion at that point. No one's willing to trade, and price will float back up. Have you ever looked at the quotes column as well with BookMap?
No, I don't really. I haven't. I find something that works, and I kind of just go with it, and then I start to explore with it. So, I keep it simple. I just try to keep. I really like to just watch the order flow, and I like to see the resting paper and the liquidity shifts. That's what I kind of feel real comfortable with, and so I'm still a student. Everyone's a market student, and so I'm still kind of diving into all the aspects, because the BookMap is very rich, and I haven't really dove into all the different pieces. So
no, I mean, I bring it up because it's an interesting thing. The way that you're looking for like really big trade size, and making that distinction, and that's what, well, in fact, you're not even looking for necessarily the color of the or the dominance of it being buying or selling. You're just looking for activity.
yes,
and that's what the quotes column can do in that sense. I mean, just because that in the high frequency environment, a lot of the algos are not necessarily looking for the trade activity. A lot of it's disguised. They're looking for just flurries of any activity, and that's captured with the quotes.
okay.
So no, it was just it just kind of spurred that question, and that's actually not it, John. It's another one. So right click in that column, okay, and then go to quotes counter. Yeah, that's it. And then maybe right click again and format that to bars only. And then to the right or left, maybe alignment. Doesn't really matter, I guess. But yeah, so then that's all of the orders and cancellation of orders
Okay.
as well. And you can split that out as well. You can see if it's more buying or selling. But then you start to get that profile of where that activity has taken place for the most part.
Thank you.
Yeah, yeah.
That's why we're here.
Yeah, no, it just brings up that comment, because you're looking at you just want to see large trades.
Yeah.
And
No, I like it.
not doesn't even matter if it's buying or selling, because Nick's next question was about some of the buying and selling, and looking at the the aggressive market orders compared to the sell orders. And it's really well, his question is a little different. He's looking for sweeping of a level, and that liquidity being all taken from a specific level.
Yeah, I guess I'm more interested at the event times. So I'm not such a high frequency trader. Looking for smaller price movements. I'm more interested in when we're breaking structure. I mean, I know what I want to do, and where I want to do it, and I'm waiting for an event to tell me when. So, I would use that information on a transition. So when the market's starting to, once the market still hasn't made a decision, are we going to continue with this positive squeeze, or are we going to, kind of rotate over? It really hasn't told us that it wants to turn yet. So I'm going to look for those kind of I will look for those kind of events, or if I get a break in the price structure with a signature like that, that would be interesting.
Yeah, yeah. And just look at them lining up there on the bid, right at your your CRX level there. It's just always uncanny to see that. Just right around there. That's where they want to buy, and see what happens when we get down there.
Yeah, you could, so you're using you can use your technical analysis. You could do retracements or swings, and here I've got a simple trend line. We've got this moving average. We kind of have this pocket here. We know this is our price structure point. So really, as long as they're holding, they're holding mark right now. They're climbing the staircase up, right? And as long as they're holding this price structure here, that's kind of the expectation. For me, it's not that interesting to be a buyer. I'm more interested in looking for sell opportunities, just because I know the condition we've broken out to the downside, so I'm looking for the kind of the negative pressure to resume, and I'm just looking for kind of when, and even so like even in this situation, and you can see how these buyers are moving away, or started to. We'll see if they come back. I'm just looking for the shifts in the book, and even if we take out these lows here, I'm not necessarily thinking that this thing's just going to collapse. I mean, the book can help me see that as well, because I can see, I definitely see that there's, really the resting paper is down here. But I know this is if this happens, that fact is going to give me more confidence to kind of sell into positive reactions. I'm not necessarily, just as this break didn't follow through, I'm more interested I want to see them break this structure, and then I want to sell and get more aggressive selling into rallies, and then with the expectation that this thing's going to, start to, get back into breakout mode. But I'm not expecting an event, because if we were going to have an event, we would have had it already. This thing would have been broken structure; it would have just gone. So it's still, to me, it's still kind of on the fence, and it's kind of a difficult spot. And if you had like right now we're looking, okay, well, if all of a sudden these buyers shift up here, that could be definitely a good buy opportunity, at least back up into this area. But until they do, it's just I'm waiting for the market to tell me what it wants to do.
Right. All right. A few more questions here. Let's see. How long have you been using BookMap?
About 4 months, 4 or 5 months.
And let's see here. If you're a shorter-term trader or a scalper, have you figured out a strategy for that?
Yeah, so shorter-term opportunities for me are, looking for, trading around the variance. So I know there's this variance around these inflection points the market's trying to make decisions at. So I can, with the BookMap, if all of a sudden I see, here these guys are backing away, so I'm not, that's taking me away from, it's kind of going along with what I was thinking of selling. So now let's say if I wanted to get more aggressive on the selling, if I see these sellers kind of shift down here, I see the book start to light up on the top of this variance, that would get me a little more aggressive, and even just trading within these variances, and you'll see that if you work with this the BookMap with the JS nodes, and you'll see how the market will kind of trade around in these variances, and you'll see some micro opportunities happen. But looking and using price structure, so just really simple just watching the bid offer line, and you're in this negative momentum. You're coming into this support area. All of a sudden, if we did get some a volume, we get a break in. Let's say we get a rally above this area here, especially if let's say we had a volume dot come in there, that could spark a little a surge back up to this level here. So that would be a little scalp opportunity. But that scalp has the opportunity to kind of come back up into this paper here, the lower alert distance off the DP. So it's all on your tactic. What are your tactics? These are just the facts. And so as you start to understand the facts better, and you have now you have more better awareness of how the structure of the market is. Then you'll start to see a lot of opportunities will present themselves. They'll be pretty self-evident, and you'll see, hey, when this situation happens, I'm really comfortable with this situation, and my tactics work great in it. And so that's really what this whole grid is all about. The strategy-based trading. You've got a tactic. What state and structure does it work best in? Okay, then you start to dial into, okay, I like corrective trades. I like it when the structure is above the market because I have this band to sell into, and this is the strategy I'm going to look for, and we can, and I'm going to dial into this thing. And is there something to do there or not? And they never, they didn't give us that opportunity today. We never got that reversal in that market. But you're there in it. You're looking at at least it points you in the right direction. Is there something to do or is there not something to do?
All right. Any more questions for John? And I mean, I always allude to or say this. I mean, just the approach here. This top-down approach is pretty. It just seems so hard to beat. Looking at the market state, the structure of that state, having a strategy for that state, and that's how John has analyzed and strategized with this macro structure. Then combining that information, that quantitative analysis with more behavioral, qualitative analysis of the technical analysis, and then looking at BookMap for the microstructure to line up with that and being able to see the limit order book historically as well as current, and then look for and pinpoint those areas of entry and exit as well as managing risk. And just really flows nicely, and I just really like the way that you use BookMap, John. I think it's really good stuff.
Yeah, no, I mean, BookMap's great. I mean, it just tells you when. You want to do something, and BookMap just says no, you can't do it yet. It's not time. So it saves you a lot of aggravation too. You definitely, when you get to a situation, you want to participate, but when do you really, put your size on? When do you put your leverage on? I think that's when the BookMap, is perfect for that.
Yeah, no, and it just lines up so nicely with your levels there. So any more questions for John? If not, then let's see, John. Let me take the slide here for a second and go over some of the resources again. Okay.
Yeah, if anyone wants to, take a demo of our application, you can go to jsservices.trade, or you can send me an email directly at info@jsservices.com. If you come up with any questions or you want to just shoot me any. All
right, so yeah, I got both those in the chat there. So jsservices.trade and then info@jsservices.com. So good to go on that. And yeah,
And then
take a
we get
look.
set up.
And how long is the demo good for, John?
So it's a 2-week demo, and you can do that with the JS Notes column in your BookMap.
All right, all right. And yeah, that's something that I need to do myself.
All
Get in
right.
there. Let's see the BookMap here. This is where you can find it, bookmap.com. The Pro version here, we do have some discounts available from one of our partners. So let me know if you're interested in that. Support at veloxpro.com. And please note that this is risk-free with our no questions asked refund policy for 14 days. So this webinar will be recorded here in the members area, education tab, and then scroll down here to the archived events, open that up, and it'll be in this one from August 25th. All right, and the playlist is here on the side. Open up the ones from August 25th. All right, so yeah, no more questions. Then let's call it a day. Yeah, thanks a ton, John. Really good stuff as always, and look forward to the next time you present.
Thank you, Bruce. No, I appreciate it.
All right, yeah, take care.
Good luck, everyone.
Yeah, and we'll talk later.
Sounds good.
Bye bye.
Bye.